Can you divorce a less optimistic view of the economy, at least in terms of the data, with a more optimistic view on equity markets?
You can, to a degree. So what's happening is credit spreads are tight, rates are low, equities are going higher. EPS is also increasing, which is helping things. The VIX has dropped significantly. And we have, whatever you want to say about Donald Trump, good or bad, he is more pro-business. And so that's been helpful. GDP has been 2%. It's been 3 yards in the cloud of dust for a long time. So really, it's about the equity fundamentals, not about GDP.
What's interesting, Jay, about the data is that we've conducted that poll, and actually Americans are optimistic about the US economy. You just don't see it in the data. Why is that?
Well, I think they're still hopeful that things may continue to improve, that the president may be able to get some things done in terms of his policy agenda, and jobs will continue to become available for them. And potentially the big opportunity, of course, is higher wages, right? We've had the jobs, we haven't had the wages. And the trick is, if you have wage growth, then I think you have a pressure on corporate earnings and also pressure on bond markets. So you may be in a little bit of a perverse situation, whereas what's good for the consumer, what's good for the employee, is not good for the financial markets, and it would be a reversal of what we've had for the last 10 years, where we've had policies that are good for financial markets, but not so good for the employee and the consumer.
So when you take a look at, say, the battle between value versus growth, which in essence kind of plays out the hard and soft data of the economic world that we've seen, what's the right call? It seems like it should be value, but it still continues to be growth.
Well, we think value is oversold at this point in time, so we expect to bounce. Obviously, growth has done well as interest rates have come down, the curve has flattened somewhat. But when we look at 2Q earnings, they're going to be very good. And we are starting to see some reinflation. German 10 years have gone from 22, 25 basis points to almost 60 in less than a month. U.S. 10-year rates have also increased, and that's a positive. So overall, we think that value will come back into favor, but growth has done fairly well. And we think that's somewhat of a catalyst, or excuse me, we think that growth will slow down going forward.
So